Have you ever had to do something over and over again until you finally got it right? Well, that's pretty much this video here today. So I really hope you guys enjoy this because this is probably the 4th or 5th time that I'm going through and recording this whole thing over. Hey everybody, Dennis here with the TruFinancials channel. Today we're gonna be going over my M1 finance portfolio, talking about dividend investing, and then also buying some new stocks. Now, if this is your first time here on the channel, we love talking about ways to save money, make money, and invest money, just like this video here today. And as I mentioned earlier, this is like my 4th or 5th time going through this. I had like technical issues with like the camera, the audio, and all this other stuff. So we're gonna go ahead and jump right into this so that way we can go ahead and kind of show you guys what my portfolio is doing with M1 Finance. When I get started here, normally I take you guys through the process of buying the new companies with me, but because I was doing this over and over again and already officially bought the companies, I'm not gonna, showcase that part. So right now the portfolio is sitting at $269.84. For the day, that is a $2 gain, and then that is a 0.75% increase. If we look at the week, we are actually up $2.09 and 0.78% overall. If we go through the month, we're actually, as it loads up, we are $5.80, and right here you can actually see we have a dividend gain of $1.56 over the last month, which is awesome, with a 2.34% increase. And then if we go to the quarter, we're up $7.96 with $1.59 here in dividend earnings with 3.94% of return. And then if we go to the year, we're up $20.60, $2.25 of that being dividends. And we are at a nice 13.69% overall growth for the portfolio. Now, obviously, since I started showing you guys my M1 finance portfolio, I've been mainly talking about dividend income. I did dabble a little bit in talking about growth income as well, because I do want the actual principle of the portfolio to grow as well. Now, there are fans out there who love dividend income like I do, and then there's other people out there that are not big fans. But of course, to each their own, and as long as you are on the path of what you feel like is going to be successful for you, what you actually enjoy doing, definitely go for it. I know there's some great opportunities in real estate and in investing in the market, but that's not everybody's forte. Like, there's some people that don't really care or understand real estate, and then vice versa. Or if you're someone like me, I kind of like both. Like, I'm excited to get into real estate in the future a little bit more than I am now, and of course, dabbling in the market. Let me know in the comments down below, do you like one or the other, or do you prefer both? So you'll see right over here that it has my portfolio estimates going on right now, because like I mentioned, I got into some new stocks. So we're gonna get into those here in just a little bit, so make sure you are sticking around. When it comes to getting started with dividends, if you guys recall from the beginning of this series, I actually had a Vanguard S&P 500 in my portfolio. It was actually a much larger percentage overall. And I think that's a great way for a lot of people to get started with dividend investing. One, because it has a really good setup as far as how many companies are in there, and the dividend yield, even though it's not the most in the world at 1.83%, the growth overall, when I was looking at it last time, was in the last 5 years, 50.21%. So about averaging about 10% a year, with earning dividends at 1.83%. Of course, I'm no financial advisor, so make sure you're doing your own extra research, but that's what I did for getting started with dividend income, because I wanted to get just kind of my foot in the door to the whole process. And you can see down here, 513 holdings, and I think Microsoft and Apple are the top. So that's what I did for getting started. And then as I kept learning and growing with dividend income, I obviously started doing more individual stocks, because I just wanted to kind of dabble a little bit more into this and be able to kind of create my own portfolio, if you will, or ETF, I should say, in a sense, and have companies that I am either passionate about, and seeing companies that have really good potential for the future. So of course we have our slices of pies here within our pie. Now we do have a new sector here, which is the consumer products actually. So this one wasn't here before. This was actually when I recorded earlier, I created it, but the video and stuff like that just wasn't working. So I do apologize for that. But I will break down what I ended up getting there for you guys in just a moment. But when it comes to overall earnings, like we talked about earlier, I've made $2.25 in dividends. Part of that goal for me is to be able to make an income with dividends in the future. Obviously not right now, $2.25 in the overall grand scheme of things is nothing, but it is a start. And for me personally, I'm excited to see where this whole thing grows over time and start making more. There's some channels here on YouTube where they're actually making a couple hundreds, if not even thousands of dollars every single month or quarter based on the companies that they hold. But I would say the biggest thing for getting started with dividend income investing would be to actually just get started. For me, I've been adding $10 a week for a couple of weeks now. I started with $100 because M1 Finance does need $100 to get started, which if you want to get started with M1 Finance, I will actually have my link down below. It does help support the channel, so keep that in mind. If you guys want to utilize this platform that I'm using here on screen, $100 to get started, and then I was adding $10 a week to kind of get to where I'm at today. It doesn't feel so constraining as far as putting all that money in at once, and I'm getting that growth over time. So for me, I think that getting started is really crucial, and then being consistent is also a big factor when it comes to actually growing your dividend portfolio. Now, if we actually go to the activity feed, I'm gonna show you guys what our breakdown was from last week's $10, because with M1 Finance, in case you didn't know, they do fractional sharing, so you can actually buy fractions of companies instead of having to buy one whole share. Last week we added waste management, but the other cool thing is when I was depositing the $10, we actually got paid a dividend. Speaking of, starting with dividends, we got a dividend from ticker number O, which is Realty Income, for a nickel. So not a whole lot, of course, we can't really do much with a nickel, but because of that $10 being deposited as well, I was able to put $10.05 into waste management, and all of that did go into the fund itself because of the percentage that I set for it. So if we go into this section here, you'll see $10.05, and it actually was able to buy 0.085 of a share, which is pretty much 8.5% of one share with waste management. So not a whole lot, but again, it's just getting started, which is a big factor here. Now, for those of you that enjoy watching which new companies I add into the portfolio, when I scroll down here, I actually created a new pie. So this new pie is called consumer products. Obviously, we already have consumers in general, which if we go in here, you'll see it has, Tesla, Disney, Home Depot, and Ross. So this small portfolio is actually doing really well for itself, which this is why I love M1 Finance, because you can group different companies together based off of sectors or how you like it. You don't have to follow the exact rules like everybody else. If you want to have, 3 different companies from 3 different sectors in one pie for whatever reason, you can do so. But, for me, this gives me great information. Like right now, my consumer pie is doing really well at 7.4% altogether, with a total gain of $2.51, and then 7 cents was from dividends. So that's what I really like about it. I can go back and go and see each pie individually. I can see like real estate is only up 0.24 total. My tech is up only 1%, which is a little surprising because of Microsoft, but I think AT&T kind of brought that down a little bit. We also have our industries that you saw last week with waste management. That's the only one in the stock right now, so of course that's affecting everything. And then our consumer products, which is the new one that we just added. I added actually not 1, not 2, but 3 different stocks in this portfolio this week, which I know is a little unusual because we normally only do the 1, but I wanted to start this pie off pretty strong. And I don't know if a lot of people talk about these in other videos. I see different, companies from a lot of different YouTubers and what they invest in, but I don't see these ones too often. So I added right over here, McCormick and Company. If you guys know them, they of course do like spices and a whole bunch of other stuff. They have a dividend yield of 1.44% as of right now, but I also really like their growth. So even though their percentage is not very high, their growth over the last couple of years has been really good. Then I added Church and Dwight Company. This one right here, if you guys don't probably know them, you definitely know some of the products that they sell. One of their biggest products is Arm & Hammer, which of course is their baking soda and used in like pretty much everything in the world. They also have a ton of other little things that they dabble in as well. The other thing about this company is that they have a dividend yield of 1.21%. Again, not the most amazing dividend yield out there, but their growth has been really good as well over the last couple of years. And then the last one is Clorox Company. Of course, a lot of people know Clorox, but they also do a lot of other stuff aside from just Clorox. You would really be surprised And that's what I love about, some of these companies is that they kind of go under the radar, even though it's not necessarily under the radar, but as far as what they offer and what they can do, it's pretty amazing. Now this one actually does have a higher yield than the other two at 2.62%. So I'm really excited to be able to get into not just Clorox, but Church & Dwight, and then also McCormick & Company. I think these are going to be a great addition to the overall portfolio. But I think the reason I really like these is that each of these companies are also very diversified as well. And that's a big thing too when you're looking at companies to invest in for dividend growth, is what is their potential to continue those dividends? Because McCormick & Company, I believe, have 33 years of dividend growth, which is big because one, they're an aristocrat at that point, of course, but two, that means that they are consistently focusing in on creating profit to be able to pay their shareholders for so many consecutive years, which is obviously a really hard thing to do. So I'm really excited for that. I wanted to group these up in consumer products instead of just regular consumers because they're more the individual products, where the other consumer profile is more of like the retail stores that would sell potentially these type of products. So I kind of wanted to keep them separate. But again, I'm really excited about how diversified these different companies are in their actual products. So I know there's a lot of people out there that talk about AbbVie, which is another company out there in the stock market. But when you look into their history and right now how much they are making, majority of their income comes from one product. I think it was like 70 to 80% of their profit comes from one product itself, which is really scary when you think about it because if their patents go out, if competitors come up with something even better, whatever the case may be, that can be huge and detrimental to a business when so much of their income comes from one item. Versus these companies, which give you so much more value because these guys are so diversified in what they sell that even if one product tanks or there was a big issue with one, they have a whole bunch of other products that they can kind of back up on and focus in on. So that's what I like about these ones. I'm excited for it. I think with the portfolio estimates, it is breaking down the $10 into all three of these pretty evenly because I kind of set it up that way. So each one is going to get about $3.29. Next week, of course, I will go ahead and show you guys the full breakdown of exactly how that actually goes into the portfolio. And if you want to keep on watching more videos here on the channel, check out some of these videos I have right over here. And if you made it this far into the video, make sure you hit that subscribe button down below, and I'll see you guys in the next video.